Good morning, traders. Welcome to the Flow Show on Tuesday, the 24th of January. Morning, Kay. Morning, Stel.
Good morning, everybody.
Hello.
How you doing? All right?
Not
Great.
bad. Not bad. How are you, Kay?
Perfect, man.
That's good.
Surprise visit from my Asian part of the family, so that's pretty crazy. We could never dreamt it.
Awesome.
Yeah, lovely, mate. Lovely surprise for your birthday. 31 again, I assume.
Yeah. Well, I mean, nearly. From now on, I will go backwards. I'll just stay where I am. I don't want to change the figure anymore.
Yeah, we all get to feel like that at this age. Anyway, enough about getting old and grumpy and grey and hairless.
Yeah, rather hairless.
From. Right. Let's kick things off. What should we do? Let's do something different today, shall we? Let's look at the data.
And now for something completely different.
Now for something let's get rid of that crap first of all. Right, there we go. Right, so it's the continuation of PMI day today. Let's take it back, way back. To yesterday's data and bit of data out. Eurozone consumer confidence, a number that's only ever been positive about 4 times in its entire history. Slightly worse than expected, but an improvement on last month. Eurozone folks only confident by minus 20.9 this month. PMIs kicked off as mentioned. Australia falling further into contraction on services and slightly into contraction on manufacturing. Coming across some business confidence data there as well. Another miss, down 1 on that side. Business survey lower than last month. Over to Japan, and another bit of divergence between manufacturing and services. Manufacturing PMI coming in further into contraction, 48.9, matched last month, but didn't do the expected pull up to 49.4. Services stronger, 52.4 versus 51.4, expected, higher than last month as well. Bank of Japan core CPI number there as well, coming in higher, 3.1% versus 2.9 expected. So the inflation data still going upwards in the Eurozone. Coming into Europe and the PMIs there, a bit of a mixed bag, but France getting manufacturing back into expansion, services creeping a touch lower. So we keep seeing this, we've seen it for quite a few years now, this divergence between the different sides of the economy, services and manufacturing. Obviously there's lots of different inputs into that, things like commodity prices and what's going on with China, that sort of thing. But as I say, bit of a divergence there. Germany as well, further into contraction on manufacturing, but up into expansion on services. The Eurozone number there as well, not too much to talk about. Again, a bit better on services, there or thereabouts on manufacturing. The UK as well, not following the ECB beat. Services, manufacturing was a little bit better, but services a little bit worse. Both of them still remain in contraction. So overall, the data's it's a little bit mixed bag. You know, that I don't think there's really a trend to take from this, apart from the fact that you know, the Eurozone is potentially not looking as bad as we might have expected coming into the new year. Obviously, it remains to be seen whether that continues, but it's not looking like anything's going to heat up soon. The data is marginally on the better side than what we're seeing elsewhere in countries like the US in certain aspects. It's certainly going to keep the ECB on course for a 50 pip hike at the next meeting and probably thereafter. So no real change in this data to those expectations in any way, shape or form. What do you make of it, guys? Are we just going to be scraping along like this for the year. Data 1 minute's good, next minute's bad. No real volatility in the economic numbers. We're not going to see growth at 5%, and we're not going to see contractions at -5%. Are we going to just sort of bubble along?
Most likely. I don't think there's going to be any major trend, let's put it that way. The only thing I think is going to be moving data-wise is inflation going lower. I've said that for a while. And I mean in the short term, the next few months. After that, towards the end of the year, anything can happen. But otherwise, yeah, I agree with you. I think we're going to be, there's no, well, at least I don't see any reason why economies should be crashing or really doing very well. I think we're going to be just treading water for now.
Yeah, no, agree. Kay, your thoughts?
Yeah, I think if you look at those data, we are more and more getting a confirmation that the worst fears may have been a little bit too bad. The Eurozone especially. And of course, I mean, it's not going to be all roses and full steam ahead with the economies this year. That is for sure. And then Estelle has said, inflation will adjust. But yeah, I think the message here is that it could have been worse. And that is likely what the markets are now getting around and looking at the various currencies and the way they move and certain assets. I think that's what the market is now trading after the worst fear being a bit over. Now we are like adjusting to it, and we are seeing it in the equity markets. We're seeing stuff like, especially the European equity markets doing pretty well in general. Give and take a day here or there where they are negative. But I think the main message is that it could have been worse.
Yeah, no, exactly. And there was one thing that stuck out in a lot of the reports this morning, especially from Europe, is that although input prices have eased, output prices, i.e. the costs that firms are passing on to customers, is still gaining significantly. So although their costs are coming down, production costs, they are still passing on probably the higher costs that they've seen over the prior months. That is potentially going to keep inflation bubbling underneath the surface. It's good on one hand because then it becomes a higher margin thing. Obviously, if your costs are going down and your selling prices are going up, you're going to be making good money, which is good for the economy, obviously. But it also suggests that maybe inflation, like Stell says, will come down, but maybe it will find a bit of a level. And we should also note, oil has been going up, commodity prices have been going up. We've not seen the sharp volatility in commodity prices that we saw the last year or so. You think about those sharp lumber prices and stuff, but commodity prices are creeping up. Maybe a lot to do with China reopening, and that is going to feed into prices. So it's never a one-way street with inflation, but that sort of stuff is going to be felt maybe 3 to 6 months time from now. Brand just asked a question. What does it mean when there is that divergence? It's mainly just when you look at the economy, there's different sectors, Brand, to an economy: services sector, manufacturing sector, public sector, private sector. There's all different parts of the economy. What we basically look for in the fundamentals is everything pulling in the same direction, or are there a little bit, if manufacturing strong but services is weak? For a country like the UK that is heavily service related, that makes a bigger difference to a country who's more manufacturing related. So we just look to see how that divergence affects an economy, and you want to see everything moving in the same direction higher. But if one side isn't, and that's the strongest part of the economy, you're not going to get the same sort of positivity. Sorry, Kate, mate.
Yeah, no, I was just going to pick in on what you were saying about the input and output costs. I think there's been a bit of a delay as well. I think the whole the economies everywhere have been under severe pressure in the pandemic, and perhaps the companies have been wanting to more gradually push the price hikes through to the public. and that's where likely your delay is between output and input prices. Input prices will have been affected straight away when commodities and oil and energy goes up for them, and then even though if we the public have already been well impacted with everything, but still the companies will want to get their money back and continue to keep the prices higher for a bit longer.
Yeah, exactly. And there's always a lagging effect. What happens with commodity prices and stuff like that coming through into producers and things like that. So, yeah, there's always a time lag, and we always look about 3 to 6 months ahead before we think about when certain effects come back into the market. Right, let's have a look at some of the headlines then. So, and I'm going to keep an eye on cable just for the moment, because we are hovering at this 123 level, and I've dropped a little little sell stop in 122.85, because I think there's going to be a few stops if this 123 goes. So I'm going to see if I can catch that move, but it's looking weak. So I'm just going to keep half an eye on that while I talk. In Japan, Suntory Holdings said they want the next Bank of Japan governor to show a clear roadmap, including the criteria for ending yield curve control. And they want to keep increasing wages as long as the cost of living continues to rise. What do you make of that headline, Kate? Putting a bit of pressure on the bank early doors?
Yeah, I've seen other articles as well that Kuroda is taking the Japanese public a bit for fools. There seems to be a lot of pressure building on Sake-san. Yeah.
Yeah.
I don't know if he's going to give in. We're close to the end of January. He's got another 2 months to go. Yeah. What all of this may do is create a big wave of expectations going into April.
Yeah.
And the market will be building up on it, and the more we're getting comments in that direction, it's likely going to increase the pressure at some stage. But for now, I think he's. I'm not saying he's managed to curb things, but he's keeping the dogs away from his door. I'm just looking at the Japanese 10s; they are around 0.4. So far, the market has to take into account rather what he has done than after initial wave of speculation than what the expectations are right now.
Yeah, yeah. And we're obviously going to get a big moment if we get the nominations in February to find out who it is. If it's someone who's pretty much Kuroda Mark II, it's probably going to have the effect of sending yen pairs higher. But if it is a bit of a left field selection, someone who's maybe a bit hawkish, then yeah, that's gonna see us with a bit of volatility, no doubt. Meanwhile, Japan's Finance Minister Suzuki said that FX rates are decided by the market. It's been a while since he's popped up talking about the currency, considering all the chatter they gave us when it was ripping up to 150. Over to the Bundesbank, and the German economy likely stagnated in Q4. Recent indicators are better than expected. The ECB lot go on blackout Thursday, and it can't come soon enough, because in the meanwhile they're coming out of all the woodwork to give their 10 pence before they do go into blackout. ECB's Casimir says inflation easing is good news, but not a reason to slow the interest rate hike pace. We need to deliver 2 more hikes by 50 BPs. ECB Stornos, one of the less hawkish, says rate hikes should be more gradual. I wonder if he's the guy behind the story that we got last week, that they want to do a 50, then maybe pull back to a 25. ECB's, I can't remember his name now, Vucic, says debt guidance on a 50 pip hike still reasonable. Visco, ECB policy normalization must continue at a gradual pace. Raising rates too much or too little imply equal risks. So I'm not convinced that right now it is better to take the risk of hiking excessively. Lagarde has said the ECB have made it clear interest rates will still have to rise significantly and at a steady pace. A little other story from the US. Apparently the US might cancel the next wave of SPR sales, the oil sales that they've been conducting. The next one was maybe coming up later in the year. So they might curtail that and look to maybe rebuild stocks rather than letting stuff go. So that was out sources piece out last night. Guys, you got any bits and pieces? A bit quiet on the data front. Nice and quiet now. All the Fed heads have shut up.
No, nothing new. Nothing new. I was reading actually yesterday, Citadel. Did you read about that?
Yeah.
They had the best annual performance ever, 16 billion profits. So Ken Griffin is the guy. Anyway, just goes to show some had a pretty dismal year last year, but Citadel definitely wasn't one of them. They did very well.
There's always someone making money.
Yep. Somebody always knows something. Anyway,
yeah.
Go on.
No. The only thing about those oil, the SPR and things, it was a pretty cool level they pre-announced. The range $65-72 where they wanted to buy, and it did put in the bottom for oil not far from there, right?
Yeah, the old bid and bid.
It was tradable. It was absolutely tradable.
Yeah, certainly was. And Biden's sitting there on his phone with MT4 open, trading away like the rest of us. Maybe we should get him on a TFP still. Old Biden. Can we trade oil on the TFP?
Does he have enough money? No.
Yeah,
you can definitely trade oil. Yeah.
Yeah. Okay. I'll maybe send him a link on the old Twitter. See if we can get Biden on the TFP. That'd be a sales pitch and a half. Right, James asking about the BOC. Yeah, we can look at dollar CAD. I personally don't have any big expectations for that one tomorrow. I think they're going to go a 25 and just indicate that they're going to continue with the path of policy that they're on. CAD has been a bit of a strange one of late. It's been a bit cable. It doesn't know whether it wants to go up, go down, or what it wants to do. No real trend, no real signs of which way it wants to go from here. So I'm not overly impressed with what it's doing. I don't have a real bias either way. I think for the Bank of Canada, it's only if we get something unexpected tomorrow that brings a reaction that might be something I look at trading wise. Other than that, I'm going to be just plotting out the levels as usual. Anywhere up maybe 135s. I don't think you'll get as high as 137, but that would be a lovely juicy area to look at to keep it in the range. On the downside, we've probably got to watch this 133s and down to that prior low 132 down there. Those lows there is going to be a consideration depending on where we are going in. James, if you've got any thoughts on the BSE yourself, then do let us know, and we can chew them over. You guys got an inkling for this one? Are we going to get anything shocking, or is it going to be business as usual?
No, but I'll show EuroCAD in a minute. We've been talking about that in the room since last week, and there's some really interesting levels up in the low to mid 146s, which we traded and which are pretty interesting going into the Bank of Canada tomorrow if they would underwhelm. That there's some really big level to watch up there.
Yeah, cool, mate. Okay, I'll let you take that one in a bit. Just a few things I'm looking at and trading at the moment. $1 is obviously one been highlighting, still banging ahead up at this 678, 79 area. I was running a buy stop 79.50, but I've decided to take myself out this zone up to 80 and stick it just above. I don't want to get into here high ticked on a trade, and it doesn't break 80, and then I'm sitting there picking my nose offside for a while. So I've just moved my buy stop, say, up above 6.80, just to maybe get outside any noise that happens in here. But it's still not doing an awful lot. Big reason, obviously, because China and the holidays, they're not doing an awful lot, all closed up over there for that. This will be an interesting one to watch when China reopens, and I'm going to be watching carefully where the dollar is generally in relation to this one, because if the dollar's looking very strong, then maybe I'll stick with my buy stop, because this might play a bit of catch up. Conversely, if the dollar's looking really weak, I might think about changing that around and looking at shorting in this area, at least from the dollar side, and then we'll see what happens with China thereafter. Aussie dollar, it's a bit, I find myself in on both sides of this one. I had a couple of small shorts, 3 small shorts over the fix yesterday when we got this rally up towards the highs, just because it looked very fix related across some of the Aussie pairs. Probably the biggest mover yesterday over the fix. So even though I'm core long and we'll be happy to see it get much higher, at the moment it couldn't really even get up towards that prior highs, up towards those 60s. So a bit of steam's come out of it at the moment. While it stays above 70, that's probably going to keep this portion of the break in tow, and I want to see it for my longs holding 70 at least for a significant amount of time, because it's failed to do that previously. But I am short-term short, and I'll see what happens into this 70 area as to whether I want to cut out. If I see 69.80, I'll probably knock it all out and then take it from there. Another one I tapped yesterday into the fix was Aussie yen, because it knocked up against this old resistance area. Let's stick it on there. So up towards that 92 handle. It's been quite sticky so far this year. So we got close. I knocked in a short there. I've already cut some off this morning. This one I'll just see where it goes here on out. Euro sterling as well. It's made a little bit of a move back up. I don't think it's doing an awful lot right now. If we can see it holding above 88, the big figure, yeah, we might get a move up back towards the highs. These old levels I'm expecting to show up once again. It's going to maybe creep up. We'll see what happens. The euro dollar is being pretty resilient at the moment, doing one of its not a lot of things. Very tight range, 1760 up to those 109. So keeping fairly tight, moving around the levels. Straight up after the first test yesterday. Now it's resistance again into 109. Coming down back below. Are we going to see support coming in at 108.30 into 108 again? If you're scalping, this is probably ideal for you. It's holding where it needs to hold. It's supporting where it needs to support. So long may that continue for you guys. Kay, do you want to do your little round robin?
Yeah, why not? I'm just going to show. Obviously, I've been off for a few days, but there's a few things of interest out there. And let me start with that Euro Canada that I was talking about.
Just while you get your screen up, just going to answer a quick question from lost it now, from where was he? From Surab, asking, does anyone use Bollinger Bands? I certainly don't. I'm not sure you do, Kay. Still, you got any interest in Bollinger Bands?
No, I keep things simple because I'm a simple brain. I can't handle the complex stuff, so I don't use that. No.
No, but it's I'm not sure I don't see many people in our chat room using Bollinger Bands, but I could be wrong. But anyone here in the chat who want to offer anything to Surab, then please feel free to drop it in.
There's a few looking at them, but personally I don't. I think Brand does actually, but Brand looks at everything, right? Right, EuroCAD. That was one that we were looking at last week. A good few of us actually. because we've come into this, going back to 2021, it's been a level 146 and a quarter, 146.30, 146.30, and we went back there to 146.40 last week. And we also have the 200 weekly moving average up there. So it's a level good enough to closely monitor. We've been trying, and some of us to various degrees, trading off this level with some success, and because we're trading a little bit lower now, around 145.20. As usual, I really, because I wasn't really very present, I've done only smalls, already taken some back because they're on the shorter term. There was a bit of support here between the levels that we've seen, so taking a slice back, but really it's a pretty decent level to monitor. If tomorrow Bank of Canada would how should I say, especially underwhelm, right, then this could really become a level to closely monitor. And for sure, if it breaks, I'm going to be out of the rest of what I've running. On the underside now, I think if the Bank of Canada does not disappoint, there may be a chance to have a little look at low 144s, where I'll be happy to probably take the rest of my profit, because I'm not, for the time being, I'm not really a euro bear. Dollar Canada, I really don't have any view on it. But there's another few things that I wanted to share. So as people know in the room, I bought euro yen last week around. Yeah, so I was hoping to get back to this lower level, but I missed it. So after this little drop down and then getting back above, I started to be a bit long. And then yesterday early morning, I took profit along this the top end of this channel, and this is still what I'm monitoring now. The 142. Call it 142 figure 10 zone. That's going to be relatively interesting, I reckon, on the euro yen. If it goes, we can have a look at 143 again, probably. There's a 50%, or is it 61.8 rather, around 153.15, which would be perhaps not a target, but anyway, which would be a nice level if somebody wants to buy the break to watch, and then ultimately 144s probably, if it breaks. But in the meantime, we have to respect this level. I just bought a really tiny one back this morning, because yesterday something caught my eye, and perhaps you talked about it on the Flow Show as well. Did you guys see this article or those comments by Kishida saying that Japan is on the brink of social dysfunction as births fall? I don't know if you talked about that yesterday.
Yeah, I saw that. I didn't put it up as, I don't think I put it up as one of the headlines yesterday.
That caught my eye, because it's one of the reasons for my long-term view that Japan is at risk of somewhere locally, at least, imploding. Of course, they have a lot of their companies, their biggest companies, doing business outside of Japan. So they would be less affected by it. But the internal economy of Japan, to me at least, in the very long term, is not looking good at all.
I personally hope they didn't just realize that Japan has a demographic problem.
Nah,
I mean,
of course not.
It's been a problem for decades.
And yeah, but we know, but you know, it always comes back here now and then. And also people are rightfully saying, exactly, Mike saying that Italy is in the same boat, China is in the same boat now as well. But in Japan, I think the process is already ongoing for longer. And I still think in the very long run, it's an issue for Japan. We also cannot forget that the people like China, for instance, they've got a lot of more human reserves, if I may express myself that way, to weather that storm a little bit longer. But anyway, bringing it back up, I thought it was an interesting one, interesting comments by Kishida. So, but anyway, that's for the euro yen and the long term on the yen. The dollar yen is still up and down and in the middle right now. I can't see really a lot to do. Although we are seeing signs that levels sub 130 may find a few buyers. So the rest is now, I reckon, rather up to the dollar than the yen. The yen seems to quiet down a little bit as a currency. Top side, still watching. Top side, still watching the 131 and a half, high 131s for now. But I, as I was saying earlier, I think the more interesting zone right now is going to be somewhere around 132.80, 133. If that would give way, then we could see a push up to 134 and a half. That'll depend, I think, right now on what the US yields are doing, rather than immediate threats of whatever intervention, whatever changes of monetary policy in Japan. It's going to bubble under the surface, but I think news-wise and fresh headline-wise, it may quiet down a bit, and we turn more to the other side of the yen pairs for direction right here and now. What else was I going to show? Yeah, and I'm just going through the chat to see if anybody mentioned anything. Oh, cable, yeah, cable and euro sterling. Yeah, as Ryan already showed, cable here, bit of a level, 123, the figure 10. For the time being, it's holding, so we have to respect that. If it's going below, I think there's a chance for a quick move down to low 122s. Not sure that the one PMI can trigger more than such a move, and the rest will depend on this afternoon's US PMIs. But I do think the level is a bit in danger here, and there is a possibility that we go down, well, at least another 50 points, or who knows, down to those low 122s. Euro sterling, I'm a tad long. I bought a bit more on those PMIs. Yesterday we stopped right on the 23.6 here. Sorry. Today we are going a little further, but we are stuck on the 38.2 of the bigger move lower. So this 15, 25, 10, it's a bit of a level here as well, but call it 10-25 zone. If that starts to hold, then I think we have a chance to get back to the prior highs. And still my magic level, the door to 90 will probably be just above 89 in euro sterling. But as usual, I bought a few more this morning on the PMI, but I'm trading them around, so see what's happening there. But I'm still positively oriented to in euro sterling for as long as this 86, 85, 87 the figure holds. That's been my my measure point for this move higher to hold in the end. I don't know who and I don't know why, but gold is still very big. Is it still China and Russia buying it? Is it the market buying because China and Russia are buying? But matter of fact is that gold is holding rock solid. Since we've broken above here, it's never looked back. And we're trading at 19 in the 1930s here. Now we have to look to see if 1895, 1900 holds. If that does, nothing rules out to have a test in the 1970s towards 1980 in this gold. I don't see really much, perhaps here prior low. So I don't see really much to cap it right here, or what would technically be the cap here. So Yeah, gold is a bit of a surprise. Oh yeah, I did see a question about silver, but we have a buy signal. It's perhaps on the really short term, but if you look at it on this picture, we're still within this zone. Yeah, we're breaking below, back up this trend line, but it's a bit of fragile one. Really, the big message is that we still can't break above 24.5, and every time we get below 23, we haven't had a look at 22 yet, and I think it might be just because gold is trading higher that silver is holding up as well. But yeah, we really need a break above 24, 40, 50 to keep going. For the rest, I think this is in a range. Same as Dell, I've let some go, but already a while ago. And I'm looking to see if I can get it back here. But for the rest, I'm really not doing much in silver right here and now. Euro sterling 61.8 at 88.30. 61.8 of what? Oh, 61.8 of what, Gav? Perhaps you can show it is in the room on the 4 hours. This one. Okay, this one. Okay, yeah, all right, got it. Okay, so yeah, there's a bit of levels of interest here indeed. Anything else? Ryan already showed the dollar China. For those watching Scandies, Norwegian kroner is working on triangles, levels, trend lines, but it's not doing a lot around 1070 right here and now. I think we need to get back above 74, 75 to get going again into the 1080s, and on the downside it's going to be 60, 62 on the euro and NOK for those who follow NOK.
Catherine was asking about Euromex, mate.
Yeah, okay, I'll have a look at the Euromex. Dollar NOK interesting is that we are not able to break this trend line. Well, okay, we had the overshoot the other day, very early January, when the dollar put in the spike, but then we came back below very quickly. I'm still respecting this trend line, and we're holding below it right now. So 993. 994 is your level on the dollar NOK right here and now, and then watch for confirmation through this 10.05 zone if the NOK would weaken again for dollar NOK to shot higher. Inversely, the downside level still there, 978, and then the big one, which I'm still watching in the more medium term, is the 970, of course. Euro mix. And I have to update it because having been off, but the levels haven't changed much, right? So, oops, we're still in this bit of a range, but it's getting rejected every time we try above this trend line, this channel trend line. Same as the rejections under it. So I'd say respect the channel for now. 1055 is already your 54, 55 is your resistance up there. But depending on how euro goes, I wouldn't rule out if some retests rather in this zone. Long term, we can't. I can't at least be short mix for very long because the funding is starting to bite really, really, really fast. If you want to trade it, yeah, by all means you can, but know that it's a fast mover, and in no time we could also be trading back here at the 2065. I'd advise people if you want to do this in the shorter term, to not go in too hard because this is a fast mover. For the longer term, it's a little easier because if you're short, for instance, you can sit on your position for a little bit longer if it stays in a range and you're getting paid to be long max. And then the downside levels, well, we are supported here around the low 2040s again. That's the first very immediate level, I would say. This 2020 2035 hadn't really shown up, but this one has shown up a little bit. So 2020 is your level on the downside, I'd say. So that for the euro mix right now. And I think that's it for me, Ryan, for today.
Okay, mate. Thank you very much.
I'm looking around, but I don't really see much else that I can talk about. The 10s, yeah, hovering around 350. I don't see what there would be to do here. We had that break below 340 the other day, but then it actually quickly came back. So look at 5358, 55, 58. If we start to get back above, that may mean a little bit more in the US 10s, and if that would occur, then I think it's probably worth paying attention to what will happen in the dollar yen. So that's it for me, mate. Back to you.
Yeah, thank you very much, mate. I'm still keeping an eye on cable. You know, I'm getting a feeling it's going to.
Yeah, I think so too.
Break here.
I think so too.
Yeah, I might try and knock some out if we get.
My overall view is, and it hasn't changed for a while, is that I think euro dollar could just hang around in this zone, perhaps 107.70. Yeah, I should have shown the euro dollar as well, but because it's a bit of a magic level, just around 109, 109.40, depending on which level we take. But I think we could hang around, and then euro cross is performing pretty well, right?
Yeah.
And just because of the European data are showing a bit more resilience, and the ECB hawks seemingly having a little bit more impact than what the doves may say right here and now.
Yeah, definitely, mate. Definitely. Stel, you got anything you want to enlighten us with? Because I'm struggling.
Nothing really changed from yesterday. I mean, I'm going to just echo what Kay said. 90 is my level for euro pound. I've said we're going to 90. Wow, for what, weeks now, and we're almost there. And central bank's divergence, at least in the short term, is driving this, I think. And silver 24.50 or 22.20, take your pick. Between those two levels, it's going to be noise. And again, we've said this for a while, and it has been choppy between those two levels. But nothing more to say. I have a natural bias to be bullish euro, again because of the ECB. But once more, this is in the short term, because you never know what's going to happen. Next week, next month, they might change their tune. But in the short term, that's my bias. And also, I think it's going to really matter what the Fed does, obviously, on the 1st of February, because we're expecting a 25. What if they don't deliver 25? I think they're going to do 25, but what if they do 50? And that will change everything. But I'm going to reiterate once more. For me, the most important event is the next US CPI print. I think it's going to be lower than expected. The calculation has been changed, all sorts of stuff. So I think we should be really, really careful going into that print. But yeah, otherwise, I don't have anything new. Yields are not doing anything now. They kind of stole the 350 in the 10-year. Gold is still trying to go higher. But the other metals are not following. So kind of no man's land for most instruments, unfortunately.
Yeah, I think that's the case. And I've been expecting it a bit, really, because we are getting into the orbit of the next run of central banks. I think that the data is probably going to give us the most volatility this week, because everyone's going to shuffle their pieces around for expectations for the central banks, depending on whether the data is good or bad. Or whatever, particularly for the US with the Fed first up. But obviously, we've got the Bank of Canada Wednesday, so that will give us our first indication of whether we're going to get any waves coming from these central banks. But in between that, I think we're going to see a lot of sideways action coming in, and maybe pairs being a bit more quieter around until we get to those data points and until we get to those central banks. So that's why I'm going to have my sniper's gun out and just see if I can pick off some levels here and there. but otherwise I've not got a huge bias for most pairs except for those that I'm in, and even one of those dollar yen, I'm still short, but I'm still thinking we might see it creeping further higher. So at the moment, the H4 or the 100 moving average on the 4-hourly seems to be helping with the resistance case up there, but I'm not going to go out on a limb on that one. So okay, we shall call it an early one today then, seeing there's not too much going on.
It's still 45 minutes. It's not. It's decent show.
Of course it's decent. Yeah, of course it's decent. We like to fill our time.
We're spoiling everybody.
We always spoil everybody, and they spoil us with their presence, of course.
Of course they do, and we do appreciate that.
Yeah. So okay, that's it for today. Maybe we'll look at right. How is quick question from Sarkis? How are dollar pairs affected by 10-year yields? If you same way, yields, particularly a pair like dollar yen, can be very reactionary to yields. If yields are running higher, dollar follows, and that runs higher too. But that correlation can switch from time to time, and if yields go too far, then the dollar will run into its own technical problems or technical levels, and there's always a point where that correlation just breaks down for a while. But anyway, you use the theme, yields up, dollar yields up, US yields up, dollar likely follows as well. Okay, boys and girls, thank you very much for coming to today's show. Have a great day's trading, and thanks to Kate, thanks to Stel. We shall see you bright and busy tomorrow.
Thank you, everybody.
Hi traders, I'm Ryan Littlestone of ForexAnalytix and Forex Flow Live, and I'm here to introduce you to the Flow Show. Every day in the UK European morning session, we run the Flow Show, bring you all the latest market news, data moves and events. We make sure that you're informed about what's happening and what's to come that week and each day. What makes us different is that we bring clarity to the fundamentals. We tell you what a central bank comment or piece of data might mean for the price moves and trends you see every day. By nature, I'm a fundamental trader, so I need to know this information myself, and it's what I look at every day to shape my trading decisions. And now I want to share that with you to make it easier for you to understand them and help you learn how they can affect markets. It's not just about me listing out numbers and headlines. We analyse whether there are trends that will change or develop from certain data points, or whether a central banker said something that might change the path of monetary policy and thus prices. We don't stop at the fundamentals though. The fundamentals are just the start of my trading strategies. They create the idea for trades, but then I have to look at the charts to find the levels I'm willing to trade those ideas at. And so that's a big part of the show also. We delve into the charts to look at the tech and how they may help us either plan new trades or to manage current trades. We like to vary from the script too, and sometimes we will have a show that's purely focused on something like trading psychology. Or we may have some special guests on. You just never know who or what might pop up on the show. But that's not all. This show may have my name tag on it, but it's really not about me. It's about you. And so I want to get your input, hear your views, get your questions about all aspects of trading. If you have questions about the fundamentals, the technicals, about learning to trade better, or you simply have a question on what a particular pair asset might do, feel free to come and join the rest of the Flow Show community in asking these questions live in our chat function. So, if you're just a technical trader, we've got you covered. If you're a fundamental trader, we have you covered too. And if you want to learn how to improve as a trader, well, we have that covered also. Our show brings you the information in a way that's easy for all to understand and act on. So I look forward to seeing you each and every morning on the Flow Show. Trade well and be lucky.